What is going on, Duvall TV? It's time for the Mortgage Minute for the month of August. As you might have seen last week, and you see the headlines that the Fed is expected to cut the federal funds rate by at least 25 basis points at their upcoming meeting September 17th. The speculation around this is how will this affect mortgage interest rates? To better understand how mortgage interest rates might be affected, let's take a look at what exactly the federal funds rate is. The federal funds rate represents the interest rate that banks and other depository institutions charge each other for overnight lending of funds held at the Federal Reserve. Essentially, the federal funds rate is an overnight rate. It is a very short-term interest rate. So with the federal funds rate being a very short-term interest rate and the fact that mortgage interest rates on a 30-year fixed loan is a very long-term interest rate, those two interest rates are not directly correlated. If the federal funds rate drops tomorrow, that does not mean that mortgage interest rates are going to be dropping tomorrow. Mortgage interest rates are more so correlated to the long-term bond market yields, so the 10-year Treasury is more so what we look at when we're trying to determine what mortgage interest rates are doing. So if the Fed starts to cut interest rates, that means that short-term money is becoming cheaper and more available. And what you'll want to watch to determine if mortgage rates are going to go up or down is looking at the long-term economy as a whole. The more we see inflation come down, the more there is the likelihood that rates can settle. If inflation stays high, then mortgage interest rates might stay high for longer. Also looking at jobs reports, the more unemployment we see, the better it is for mortgage interest rates as far as seeing them settle. That all being said, we have seen mortgage interest rates settle over the past couple months. We're now sitting somewhere in the mid sixes depending on your situation and the loan type. Now is not the time to sit on the sidelines and wait for the Fed to cut rates, because that will not mean that mortgage rates are going to drop. Now is certainly a great time to lock in your interest rate if you're looking to purchase a property. We're at the lowest rates for mortgages that we've seen since last October. If you have any questions whatsoever on mortgage interest rates, on the housing economy around Duvall, reach out to myself, reach out to Buddy, and we'd be happy to team up and help.